Hello everyone, welcome to the Ichimoku daily analysis for the Euro-US dollar FX for Wednesday, July the 8th. Well, a new first time frame downtrend for this market again, and we have a lower high and a lower low, so the trend is changing quite often. We previously had just a one-day uptrend, which was a change of the trend, and now back down to the one-day downtrend. Now looking at the candle is red, which means that the market was net bearish for the day, but a very small body, so it means that the bears have made very little gain. Now looking at where the market closed within the range, it's closed in the middle of the range, and that means that neither the bulls nor the bears were really strong enough to close the market down near either extreme. And that tells us that the market was fairly indecisive. So even though the market was trending down and the bears did make some net negative gain for the day, it's still not as bearish as we'd like to see for a market that's in a downtrend. We'd like to see the market closing down towards the lows for the extreme amount of bearishness that we'd like to see. Now, if we look at the bottom of the body of the candle, we have this fairly long shadow. And the long shadow is quite long relative to the size of the body, and that's upside price rejection. And little wonder that there was upside price rejection. The market traded down to the top of the cloud or the Kumo, and the buyers came in. And we know that the Kumo or the cloud can act as an area of support or resistance. So here it's acting as an area of support, and the buyers have come in. So what we need to do now is watch the top of the high of the current candle for any potential retracement to the upside, and we've highlighted all through here this area to be an area of resistance. And if we look at the trading of the previous 3 days, we can see the shadows on the top of these candles. So now we've got another lower area of resistance that's built up here too. So here the market tried to trade up over 140 and sold off. Here it traded exactly to there and sold off, and again tried to trade up through there and sold off. So if the market does appreciate, then that's a natural level now where we should get some downside price rejection if the market does trade down to. Now we also have this line here at 137.90, roughly 98, where we'd expect that there could be support. That's a previous support area, and that's roughly coincides with where the swing lows of the previous failed head and shoulders pattern were. So we should get support there if the market does continue to sell off, but we could get support anywhere through this cloud, through the Kumo. Also, we've got this this swing low here as well, roughly about 137.54, where we should get support as well. Then if the market does trade down through there, then it could trade down anywhere to within the cloud and find support. Now, interestingly though, if the market does trade out down through those levels, the market will be trading down into a flat part of the cloud, and when the cloud turns flat, it tends to be an attractive price action. So if the market does sell off significantly over the next few days, there's a very strong chance that it could trade down to this level, roughly about 136. So we need to watch that if it does trade off down here, then that will be a very strong attractive price action. But we need to look at the dynamics of the market. We want quite a bit of bearishness before we decide that can happen. So interesting days coming up for the market. Need to watch the current low of the candle to see whether the market continues to sell off.